Hi, welcome to valuationpodcast.com, a podcast and video series about all things related to business and valuation. My name is Melissa Gragg, and I'm a business valuation expert focused on strategic planning and exit planning in St. Louis, Missouri. Today, we are talking ERC tax credit information for advisors and business owners with Catherine Tindall. She's a CPA in California, specializing in tax credits, and is also a partner with Dominion Enterprise Services. She's combined proprietary technology with professional expertise with her CPA team and is able to offer a fast turnaround time on credit claims while maintaining a high degree of precision. It's her mission to help business owners in key industries affected by COVID shutdowns, such as restaurants, construction, and hospitality, to take advantage of the employee retention credit before it begins to expire in the spring of 2024. Welcome, Catherine. How are you?
I'm doing well. How are you? Thanks for having me.
But even at the beginning, I think that business owners don't necessarily even know if they're going to be able to take this credit. So they kind of sit back and like, I don't know. Should I ask my accountant? Well, I asked my accountant and they knew a little bit about it, but they were a little weary because it might be complex and they don't know and they don't know enough. Are you finding that people kind of are at that space where there's not everybody knows what's going on? And like, is it really easy for a company to say, oh, what type of companies are eligible for this? And am I checkbox? Am I one of them?
Yeah. And I would say, that's kind of the key issue that I see with this program is a lot of people fall through the cracks because it's a payroll tax credit. A lot of income tax professionals, the credit itself it can be a very complex situation depending on what your company is going through. And for a lot of practitioners, they didn't want to take this on as a practice offering. And so they left it kind of to the payroll providers to do. But, for payroll providers, it's a big ask because it's a tax credit. There's no software, there's no special forms for us to use. So it really relies on the strength of the professional that's doing it. And so I think between those two things, a lot of business owners can be kind of left out just because their income tax professional doesn't see it as their responsibility to do the assessment. So I think the main thing I usually tell business owners to know about to see if this is actually something that's been done for you. The first two pieces is, does your tax pro have access to quarterly financial statements for you? Because that's one of the tests that we use is it's a revenue test and it's done on a quarterly basis. So do they have access to your quarterly financial statements back from 2019 through Q3 of 21? If they don't have access to those, then you haven't been assessed. The second piece is, has your tax professional had a conversation with you about, and this is very specific, how the government interacted with you during the pandemic? Was your company subject to operational changes due to government mandate orders? Because that's the other pathway for the program. And so if they haven't had that specific conversation with you, very likely you have not been assessed for the program because those are the two main pathways for eligibility for companies.
And it's not necessarily like you shouldn't have an expectation that your accountant is trying to find all the credits possible, because what you said was kind of important and it may have been lost on our audience, but tax professionals are focused on your income taxes. And because this is a payroll tax thing that would fall under, we know a lot of large payroll companies. Yeah. That's not what they do. They aren't in the business to go after these tax credits. So you almost have like a misalignment on who is doing it and maybe who understands it. Would that be correct?
Yeah, no, that's really what I've been experiencing in the field because I get a lot of work from people who have approached a payroll provider to do it. Mm-hmm. And then when the accountant got involved in the situation, just realized very quickly the payroll provider wasn't competent enough to do the work either. So you just get this kind of catch-22 where people get left out. And it's, I think the big piece too is like for a lot of tax practitioners, they see their first obligation is to keep people compliant. And with this, because it's a bonus program, it's kind of up, a lot of practitioners I encounter don't see this as kind of their responsibility to put this in front of clients because it's, it's not a compliance issue. It's, just a benefit program. Very similar to like how PPP went down. Some practitioners did all the PPP, everything for their clients. Other practitioners wouldn't touch it. very similar. It's not really clear from the program who's responsible for doing it. So, I definitely put the onus on you as a business owner, or if you're an advisor, to definitely check this out for the clients, or, check this out for your business and give it a second look. Because even if I had somebody earlier today that I was talking to that had 100 employees, and their accountant had kind of blown them off about it, and, did a little bit, but didn't really dig into it. And I said, well, even if you only qualify for 2 weeks with that headcount of employees, like, this is a multi-6-figure issue. And to have somebody just pass you off with an email and not really dig into it, that's not really doing you a good service. So you want to really do make sure you're giving it its due diligence, which is just a matter of talking to a couple providers and, getting a sense for, who's going to be good to do this kind of work for you. And it's not too much of a time commitment really to do your due diligence on it.